Welcome back to another video, everybody. We have a lot to discuss in this video here going into this next week's trading week, especially after a lot of this new uncertainty was introduced to the market at the end of this past week's trading week. We have a lot of economic data to discuss to really give us a better understanding of what we are seeing in the big macro picture here. Now, as always, we are also going to be covering some of the most relevant pieces of news on your favorite stocks here, Palantir, SoFi, HIMS, and NIO, as well as going over the charts to give you guys a better understanding of what to expect next. So before we get into all of that information, guys, if you guys do enjoy the information and analysis I provide for you guys in these videos here, make sure you go down and hit that like button. Costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. Let's see if we can get this video to 500 likes. That would be absolutely awesome. And again, make sure you guys are subscribed and have notifications on so you're never missing another one of these videos when they do end up getting posted live. But let's get into everything here. The first thing that I want to discuss is the PCE inflation data that we received on Friday here. So again, we saw a 0.1% month over month increase, which was right in line with expectations. And year over year, we saw a 2.1% year over year increase, with the estimate being at 2.2% here. So below expectations and getting towards that 2% there. Now, again, PCE is the Fed's preferred metric of inflation. And we have heard time and time again from these FOMC speakers that they think that the risks to inflation in the year 2025 are to the upside. Now, I've come out so many times, I feel like we're almost beating a dead horse here, that I vehemently disagree with that. There are a lot of counterpoints to this narrative that the Fed has been trying to push, that these new policies are actually going to lead to a significant amount of inflation. Over the last couple of FOMC meetings, they've recently walked that back and said, okay, well, maybe we'll see not necessarily inflation, but a one-time price increase. But that's not what we're seeing on the data at all here. We are seeing inflation moving to the downside here, and it is possible that if we start to see growth continuing to move down, which isn't necessarily as likely as it was in the first quarter, with those imports significantly moving to the upside, which is going to detract from GDP, we could end up seeing the Fed cut rates by more than what the market expects right now, which is about 2 rate cuts in the year 2025. Now, just to give you guys a little bit of a better picture of kind of where we're at with some of this inflation data here, 12-month core inflation ticked down to 2.5%, the lowest since February 2021. And you can see here, the Fed's inflation target is outlined. We are getting very, very close to those levels here. So again, that could be a sign of things to come, that the Federal Reserve might act a little bit sooner than what the market is currently expecting. And taking a little bit of a deeper look into some of these expectations here, we can see that nothing has changed all that much here. We are seeing a little bit of movement here in some of these projections and expectations after the PCE data was released on Friday here. You can see that the projections for 225 basis point cuts in 2025 a day ago was 40.2%, then moved down to 39%. And you might be thinking, well, how is that possible if inflation was a little bit lower than what the market was expecting? But you actually saw the probabilities for 25 basis point cuts, or 75 basis points of total cuts in 2025, actually step up a little bit here. So the market is slowly starting to price in more cuts than what they were previously. Now, again, just kind of on the front of what we saw towards the end of this past week with that federal court blocking some of these Trump tariffs, the appeals court came out and said, we're going to delay this. And again, introducing a lot of that uncertainty to the market. Just to give you guys a little bit of a recap here. Again, we had the Liberation Day tariffs on April 2nd. Yesterday, or Thursday, the U.S. Court of International Trade rules tariffs illegal. Actually, that was Wednesday. Yesterday, which was Thursday, court appeals. Today, a second court finds Trump tariffs illegal. Today, appeal court grants temporary stay of U.S. Court of International Trade ruling, resuming tariffs. Meanwhile, White House says they will have workarounds to institute tariffs either way, which is what we talked about in yesterday's video. So basically what we're seeing here, everybody, is there's not a whole lot of change in what's going to happen with the process moving forward with these tariffs, but it does add a lot of uncertainty over whether or not the United States is going to have the negotiating power that they had basically at the beginning of this week going into the next couple of weeks here with this uncertainty with a couple of these court cases. And then before we start getting into some of these individual names, I do want to talk a little bit about the bond market, because there's been a lot of talk recently about kind of the end of U.S. exceptionalism, that yields are going to go to 5%, and there's going to be some significant problems coming in the future with the fact that interest rates in the United States could continue moving higher here. Now, recently, we have seen yields starting to move to the downside here. And again, this is really off of that new kind of big, beautiful bill, that new tax plan that the Trump administration has gotten through the House. And that is going to increase the deficit significantly. Now, like I've talked about before, and I'll talk about it again briefly in this video here, is that the actual number that the debt load is going to be increasing by isn't actually the important part here. Even though it's a bad situation to be in, we don't want to continue to go into more and more debt. It's not necessarily the most important thing to focus in on, because what you have to do, especially when you're the global reserve currency, is you have to make sure that all of the other countries and all of the other foreign investors still have a high degree of confidence that the government of the United States is going to have a really high ability, or a heightened ability, to collect revenues. Now, how do they do that? By increasing growth. And what a lot of these different countries and investors have seen in the past, and are starting to realize again, especially after taking a lot of their capital out of U.S. markets in the first quarter of 2025 here, is that there is no alternative to U.S. assets, whether it be debt or equity. And we actually heard something out of Japan recently as well here. Tokyo, Japan likely held off selling from its U.S. Treasury holdings, as there is no alternative investment given the dollar status as global reserve currency, former Bank of Japan policymaker said on Thursday here. So remember, we've talked about this a lot in the past. I'm going to reiterate it again. A lot of this money has flown out of U.S. markets. There is a very low likelihood that that money is going to stay abroad. It is most likely going to come back at some point, but there needs to be a catalyst in order for all of that liquidity to start flowing back into the U.S. What is that going to be? Well, it's probably going to be a lot of these new growth initiatives that the Trump administration is trying to initiate here, and that's really what the market as a whole needs to see, and what investors need to focus in on. Yes, seeing the debt go up is not a good thing, but the most important thing is really that debt to GDP ratio. And if we're able to continue to increase our GDP and continue to have that ability to generate more revenues from the growth of all of these domestic businesses. Now let's get into some of these individual names here, going over the charts and some of the most recent pieces of news. The first one that I want to talk about here is SoFi. So again, we're just seeing this one chop around its daily 10 exponential moving average. Really, I'd like to see this one go down and test this 200 exponential moving average here, right around this $12.18 area. Again, I own a block of shares at $6.55. So this one has been performing very, very well for me since I bought this one back in July and outlined it for the Less Trades, More Profits community members. But again, I would like to add to this position at some point. I just want to get it at some more attractive levels here. But we do have a very famous investor, a very famous analyst now with his eye on SoFi here, and that is Tom Lee. So small and mid-cap washed out stocks include, from FundStrat's Tom Lee, Walgreens Boots, Southwest, Rivian, Roku, TMTG, SoFi, and Crocs. So again, Tom Lee again has that Granny Shots ETF, and SoFi easily could get added to this ETF in the near future. Now, next up on the list here is Palantir. Now, we saw some incredibly volatile price action with Palantir on Friday, starting off the day very, very, very strong and then selling off with the broad market as we saw that overall market volatility. And that was really because of this piece of news right here. Palantir to create vast federal data platform tying together millions of Americans' private records, stock jumps. Now, again, I'm not sure how to feel about this news here. I mean, it's definitely going to be driving more revenue for Palantir. But again, on kind of a more realistic side of this, I mean, compiling all of Americans' private records. I mean, some of you guys might be okay with that. Some of you guys may not. But this is probably a very positive development for Palantir as a business moving forward. Again, like I've said before, I will say it again. We continuously see Palantir time and time again just showing us that they are going to be growing their business in every single sector, almost every single week. We're seeing the growth of their commercial business. We're seeing the growth of their government business. And again, this week we saw, again, that partnership with Bain, SAP. There was another one in there. Oh, Fannie Mae. And then we're also seeing this new partnership with the government. Again, they are going to continue growing. Is this one that I'm really wanting to purchase right now out in the open market at this valuation? Not really. This is one that we were talking about on the live stream this morning here, that it's not really one that you want to touch. If you were in this one from when I outlined it for the private community at 15, you can just sit back, watch your gains over here, and be very happy about the investment decision that you made. This is not one that I would buy right now, but it's also definitely not one that I would want to go out into the open market and short. Now, the last two names on the list here are going to be NIO and then HIMS. So NIO, again, has its earnings coming up on Tuesday here. And as we talked about in yesterday's video, this was an incredibly bearish chart setup heading into the end of the week. You ended up breaking below this low here. You gapped down and then continued selling off here. Again, NIO is going to be one that needs to deliver in the year 2025 with its deliveries. Again, no pun intended there. But again, like I say in every single video that we talk about NIO in, there's been a lot of over-promising and under-delivering with this name over the last couple of years. If they cannot get it together, it is very likely that this business could fail. But if they are able to get it together, there is absolutely some asymmetric risk to the upside, asymmetric reward to the upside here with this name if they are able to hit those profitability metrics that they have outlined as their goal for the end of 2025 and going into 2026 here. Now, HIMS, again, another one that we were actually looking for a potentially bearish setup on. If we were to have ended up breaking below this 51.29 area here, this would have been one that I would have been willing to take to the downside. Again, HIMS was one that we were very, very interested in at this $30 to $31 area here. And a lot of people, after we were spot on correct with calling this move to the upside at these lows, were asking, hey, is it still a good opportunity to buy in the 50s or the 60s here? And quite honestly, my answer is no. And I would still say that around these levels right here. Again, when these stocks, any stock really, makes significant moves to the upside like this, and especially one that we were already eyeing at these lower levels here, to me, it doesn't make sense to overpay for any one of these individual names if you can find better opportunities elsewhere here. But seeing HIMS starting to try and invalidate this potentially bearish chart that we were seeing heading into the end of this week, again, you could easily see some short-term upside back into this range here before it consolidates and just kind of waits for what the overall market is going to do. So, guys, that is basically going to wrap up this video here. We have a potentially very volatile week ahead, especially coming up on Friday with non-farm payrolls. We're going to get a deeper insight into the labor market here with the unemployment rate. And again, that is going to drive a lot of price action and could easily move around a lot of these expectations for rate cuts going into the summer, where that first rate cut is starting to get projected to be in July. So again, that's going to wrap up this one, guys. If you guys did enjoy the information and analysis I provided for you guys in this video here, make sure you go down and hit that like button. Costs you nothing to do it, but helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos do end up getting posted live. But until next time, guys, I will see you. Peace.